Hello and welcome to today's podcast. We've got a lot to get through. We'll be talking US tech, we'll be talking chips, house builders, cruising, bit of M&A, some big oil, and even some beauty tips. So Steve, US market up on the year. Who would have thought it? S&P, Nasdaq almost at the highs, and over to you. It's tech again.
It just strikes me as a bit strange. I mean, the rally back from the gloom and doom around what's going on in the Middle East and so on, and yet the S&P seems to have suddenly decided, oh, actually, that is a bit of a sideshow, and what's really underpinning this is capex budgets are really huge. AI is still a big driving force, and what's been really interesting, I found, is there are loads of different signs coming across the markets about how solid the infrastructure spending is, and that's great for right across the ecosystem. So I've noticed that both OpenAI, so that they own, of course, GPT, easy for me to say, and Anthropic, both talking about having supply constraints. Demand is way up there, but they just can't get the supply. So they're having to slow down people's use of their apps simply because they don't have the capacity. So again, it's all
Wow.
about data centers, infrastructure. So all of those companies that are in that kind of space, your Broadcoms and stuff, that's having a rollickingly good time.
Yeah, absolutely. I looked at Broadcom's up something like 15% the last 5 days. Micron's up 23% the last five
Yeah,
days.
absolutely.
Um,
The memory world, we've talked about it loads of times before. SK Hynix in Korea, it's just been going gangbusters, but Micron has been, quite out of favor, I would say. I mean, it's still
mm,
been valued on the kind of the old cyclical semiconductor cycles. It's on a P of about 8 times or something. So where some of these chip manufacturers have been really soaring in terms of PE ratings, Micron really hasn't caught up with that. And maybe the market will start to realize that we're going through this, certainly a super cycle, and whether or not are chips cyclical anymore? Open question. I don't have an answer
yeah,
to that one. If I did, I'd be a
absolutely.
wealthier man.
Yeah, absolutely. I mean, didn't I see? I think I saw a comment from ASML this morning. Again, Europe's biggest tech company saying that, again, they're struggling to produce enough equipment to meet demand.
Yeah, it's really the same kind of dynamics are at play that underpinning all of these infrastructure firms. The big question has been about ASML's ability to sell its high level stuff into China, and that's still an ongoing situation. But it does seem to have calmed down a bit, perhaps as a certain president across the ocean has turned his attention away from China and now towards what's going on in the Middle East. But ultimately, their figures were very strong. The market didn't react terribly well today. The shares dipped a little bit, but they're up about 30% year to date, ASML, which you think about the size of the company. I mean, that's pretty
Yeah.
astonishing.
Yeah, absolutely. So, I mean, it sounds like, it's a crisis what crisis, as a particular band said in the 1970s. James, what's been floating your boat?
Oh, well, literally, Saga, luxury boat, I guess. So the over 50s firm, it swung back into black last year, and it's confident of growing underlying pre-tax profits to at least 100 million by 2030. The company also sailed higher on some soothing noises around the oil and currency hedges. And then a couple of stocks that are kind of bucking industry trends. So active manager Polar Capital, that delivered a forecast beating rise in fourth quarter assets under management. And another what Tiddler was Marks Electrical, which raised guidance for the second time in a month, which was quite a surprise given the consumer backdrop. But I think they're kind of benefiting from maybe the non-discretionary nature of some of the products they sell, like big American fridges and stuff. If they go on the blink, you have to order one and get it delivered.
Oh, right. Okay. Yeah. Of
Saga's
course,
an interesting one,
Polar,
isn't it? Because
they
it's the
run
kind of company that we're all going to be looking at over the coming years, right? We're all reaching that kind of age. We're going to have to start thinking about, I wonder what kind of products Saga might have that are relevant to me. I mean, I'm sure many of our
Mm,
listeners are in the same boat.
Steve, I've been
yeah,
getting their letters for about the last 10 years, so I don't want to, you boys, don't you worry, it's coming.
yeah.
Um, I was going to say
Another one
Polar,
that,
James, of course,
yeah, Polar.
run a global financials and a global tech fund, and both have been phenomenally successful.
Yeah, so they saw some strong flows into their technology, healthcare, and smart energy strategies. Yeah, so obviously, well known for those kind of areas of the market. And another one that caught my eye was Bow Street, which is now run by serial entrepreneur David Page, who was a founder of Pizza Express and also sold Fulham Shore. So that's a
Yes.
tiny market cap, but this guy's got real pedigree in the restaurants industry, so certainly worth keeping an eye on.
Oh, he really has. I mean, he actually, I believe, he started out washing dishes in a pizzeria before starting Pizza Express. Oh, yeah, as you say, met the guy, absolutely charming and a brilliant entrepreneur. So that'll be one to keep an eye on.
But I like the analogy there. Keep your eyes peeled, you might say. For Bow Street, so Robert Peel is nothing to do with the old coppers in.
Yeah,
Absolutely. I'll tell you what, struck me this week is, well, first of all, Standard Life, I'm a shareholder, so I see the deal with Aegon, $2 billion to buy the Aegon UK assets. So Standard Life is now catapulted itself into second place in workplace pensions and retail pensions and retirement savings. So this is a kind of a big deal. I'm slightly wondering what it means for the dividend because they're going to issue 18 million new shares to Aegon. Aegon will be a 15% shareholder in the business going forwards. So I'm kind of slightly wondering what it means for the dividends, but what they've said is that they'll continue to make it a progressive payout. So I don't know, we'll see. Shares went up, so it doesn't look like there's any shareholder concern there.
I know you've been keeping your eyes well, Ian, on the Q1 US banking season, which obviously kicked off this week, and so far the mood seems to be pretty okay. But you were mentioning something about Jamie Dimon as well.
Yeah, Steve. So JPMorgan, always one of the first to report. We had so far this week, we've had Goldman and JPMorgan. JPMorgan absolutely smashed the forecasts in terms of revenue and earnings, and the trading business was good. So the core business went really well, no questions over that. Something like 450,000 new checking accounts opened in 3 months. The scale of this business is staggering, but they also had a really strong tailwind from volatile markets because there's such a big force, debt, equity, derivative trading, and so on. So record amounts of money from trading. You'd think the stock would go up. Jamie Dimon, and he said, the economy is resilient and labour market seems resilient. But then he referred to an increasingly complex set of risks facing the economy and facing the consumer. And that could be anything from energy price volatility to geopolitical uncertainty, big deficits. And he also referenced overpriced assets. And the stock really struggled yesterday to make any headway. So I thought that was very interesting. The market's take on it was the top guy is starting to sound a bit more cautious.
Well, I mean, maybe the market's saying that ultimately maybe JP Morgan shares are part of the overpriced assets for you.
Could be. Hey, other end of the scale, I've been quite gloomy about house builders, but I find myself oddly upbeat about Barratt Redrow this morning. In fact, maybe even more upbeat than the market is.
Shocking news.
I know, shocking news. I'm going to have a lie down in a dark room. But actually, there was nothing wrong with the update. And interestingly, so they've confirmed their forecasts for number of completions and for pre-tax profits. And they've said that their cash generation will be a bit higher than they thought by the year end. That gives, I think, a bit of hope to people that the buyback will continue because the current 100 million is due to expire in June, which is the end of its financial year. Now, if the cash pile at the end of June is going to be 150 million higher, so in the region of 550 to 650 million, that gives them plenty of scope. And part of the reason for that is that they start to scale back. We heard this from Barclay Group. They scaled back their build ambitions. Yeah. And Barratt Redrow said the same thing. They said, we're going to be even more selective on which plots we develop because we just don't think the time is, we want to limit supply a little bit.
Yeah.
Thought that was fascinating.
I think before we wrap as well, I mean, it's worth pointing out that the two of you had a good chat with Nick Britton from the AIC yesterday, and I know you put a podcast out, so a listener, please go and find that and have a chat. But just give us a quick sort of summary of what you talked about.
Well, James, I mean, fancy it.
Yeah, I mean, we talked about everything from discounts to what the AIC's role actually is, a whole variety of topics. So Nick's got a wealth of experience, and he talked us through also some of the tools on the site for income seekers like the Dividend Heroes and the Income Finder. So, a real sort of treasure trove of info on the AIC site.
Yeah, really was a great conversation. He comes across very, very well, and it's it's well worth anybody who's interested in investment trusts. Just go to the website. Well, first of all, watch the video, then go to the website. What else have we got this week, chaps? Steve, you got Netflix out?
Yeah, Netflix is after the market close tomorrow, Thursday. So yeah, we talked about this on Friday. Well, we wrote about it on Friday briefly. It'd be
That's
interesting
right.
to see about the subscriber numbers, but it's not really so much a story driven by subscriber numbers anymore. Much more important, I think, than subscriber numbers will be how its advertising level layer has been embraced, and what kind of revenue growth that's going to drive, because management are very kind of confident and upbeat about that being a real driver of future revenue growth. So advertising and subscribers now, rather than just being a chase for,
Yeah,
for,
yeah,
for,
yeah,
for viewer numbers.
yeah. And James, we've got Tesco as well. You did a preview of that.
Yeah, we've got Dunelm and Tesco tomorrow, so that'll be, give some good insight into the consumer behaviour. Our customers tighten their belts due to soaring energy prices, etc. And then across the pond, we've got PepsiCo tomorrow. So the North American snacks division, is always keenly watched by investors.
Yeah. I've also got a flag. I know you're not a fan, Steve, but Beauty Tech Group, since I mentioned it last week, stock's up 30%. Come on.
Oh wow!
Numbers out tomorrow.
Well,
Keep
there you go.
peeled.
See, if you're a company of a certain type and size, get a mention on this podcast, and we do wonders for your share price
There you go.
potentially.
And we've said it before. Look, if you are, a company, a trust, or a fund, you want to come on the podcast, email us at editorial@sharesify.com. We'll do the rest. Thanks for watching. See you soon.